Hello everybody. Today it's a big day for the markets. We have CPI data coming out at 12:30 UTC time, and you can see that the market has been holding in this zone. I think I mentioned this in yesterday's video that it's likely that the market was going to hold until the inflation numbers come out, because these numbers, these results can move the market. We're in a market driven by data, so the investors and institutions, they're going to be waiting first to see what these numbers are, and then they're going to react to them. And today's inflation data is very important, also considering that non-farm payrolls last week for the labor market is still quite hot, and that's something that the Fed is not going to like. So if we see today worse inflation numbers than they expect, watch out, because maybe we don't have a pause straight away. Although I think we're going to see a pause. The rest of the market thinks we're going to see a pause, but of course we're going to see what the data says. They're expecting 5%. That's basically, 5% inflation. That's the same as the previous result in March. So if we see something like 5.2% or higher, the market's going to dump and the dollar index is going to go up. All right. Now, if we see something that is 4.8% or lower, the markets are going to pump, and that could be the catalyst for this projection to play out, because yes, this projection is still not invalidated. You can see that we came all the way to the wick, we filled the wick, and now we're going sideways. All right, now if we check the 50 EMA, we can see that we are right below it. Okay, with this is a resistance, but of course if you get very good results today, then the market pumps. You could see maybe something like this, okay, playing over the next days. You could see a push, a retrace to test the 50 EMA as support, and then you can see continuation to the upside, at least to these two liquidity pools that go all the way to 28,750 and 28,570. Okay, so that's what I'm keeping an eye on. Let's see what the inflation numbers are. We have to plan both scenarios. Are the inflation data is it going to be good or bad? If it's good, then yes, the 50 EMA, you have to clear this zone, hopefully come back to it and test that support. That's where you would be opening longs, all right? And then you can take profits along the way in these two liquidity pools. And if there is enough momentum, why not? We can go all the way here, this liquidity pool in the daily time frame. So you can see more clearly here, all right? So that's the bullish scenario if we have good CPI numbers. Now, what can happen if we get bad inflation numbers? Now, if we see really bad inflation data, and with that I mean at least a difference of 0.2% with the forecast, with expected, that's going to make the dollar index pump. Okay, it's gonna go up. Why? Because if we get worse inflation than expected, and you put that together with the bad non-farm payrolls data that we saw on Friday, then the expectations for a rate pause are going to slow down. And remember that the dollar index goes up with every hike on the interest rates. So that's why I think that if we see bad inflation numbers, the dollar is going to go up. And remember that Bitcoin trades against the dollar. Okay, so Bitcoin is going to go down. Also, there is some kind of correlation between Bitcoin and the S&P. And the S&P should go down. So everything would align together to say Bitcoin going lower. Where to? Well, if you check the chart, let me remove all of this, okay, so we don't get confused. If we look at the chart, now this is the daily time frame, we're below the 50 EMA. We still haven't tested as resistance. You can see that these 2 weeks hasn't reached the 50 EMA, so still really we haven't tested a resistance. So there is some hope that we see a recover, okay? That still can happen. Now, if we start to see, that's the 50 EMA, and we start to see something like this, testing a resistance, then of course you're going to see price going lower. Okay, now if we see very bad inflation data, we will see price going to this zone over here, okay, around 26,500. That's kind of like the last support before going to 25k, because 25k is a very interesting zone. You can see here the price reached 25,250. We saw a sell-off, then price went back up again, and there was another sell-off in this exactly same place. The question is, have we tested this zone as support yet? No, not really. And this is quite an important zone. So that's what I mean. If we start to see Bitcoin going down from here, we're going to test 26,500. We're going to go now to High Block Capital in a moment to see all the liquidations. And if we lose 26,500, then the next target is going to be 25,250. What in High Block Capital with the liquidation heat maps. Let's go to the 7 days time frame. I'm going to go through all of them. Okay, you can see that in the 7 days time frame we came and hit all these liquidations. Now we're consolidating right below them, and well, you can see that really in the 7 days time frame all the liquidity is really in the 30,000 zone. Okay, this is pretty much the liquidity pool that we saw in the daily time frame. Now let's go to the monthly time frame. The monthly time frame, I think this chart is a lot more interesting because you can see liquidity at both sides. Okay, you can see it all the way to 30,300, well, 30,300 and higher to 31,300. This is basically the liquidity pool in the daily time frame, and this is above the previous highs because I think we made a high at 31,100 if I'm not wrong, or 31,000. So these liquidations are right above the previous highs because there is always liquidity above previous highs or below previous lows. And up to the downside, and this is getting interesting because, to be honest, if you look at the chart, what's closer, 30,000 or 26,000? Of course, 26,000 is closer, and there is a lot of liquidations at 26,400. So, this can give us confluence to see that if price goes lower today because the inflation data is bad, then 26,400 is going to be the next zone. Okay, let's go to the 3 months time frame. Of course, in the opposite way, if we get very good inflation data, today we're going to go higher. Okay, let me check this. Okay, I see a lot of liquidity here. You can see that this zone is getting brighter and brighter, and that's 31,200, right above the previous high. And to the downside, I still see 22,000. This would be, in my opinion, the next level after 25k. So this is a net scenario, okay? If we lose 25k, if we go all the way to 25k and we lose 25k, then 22,000 should be the next zone. And then if you go to the 6 months time frame, this is my favorite time frame. I've said this many times. 6 month time frames, if you notice the chart, look at the chart, it has been nailing every single move. You see, there is liquidity here, price goes there. Now we're in this zone. There is starting to be some liquidations here, price goes there. At the same time, we see that it has formed some liquidations here, price goes down again to this zone, price continues hitting all these liquidations on the way. And then we are here doing some consolidation, and we see this yellow bar, price goes there. And if you look at the chart now, the next zone that has the most liquidations is 22,500. So this is concerning, in my opinion, because for what I've seen this chart, playing out, it plays out pretty well the 6 months time frame, and it's telling me that 22,500 is the zone in the chart with the highest interest regarding liquidation. So there is why I can discard the idea that sooner or later we might come down again. I mean, I'm not saying 15,000 or 16,000, but 25, 22, why not? The cards are there on the table. Anyway, guys, I'm gonna say what I always tell you. It's not financial advice, but it's my personal recommendation for you all, and is to not be overexposed to the news announcements, because what are you gonna do? Tell me, are you gonna open a long or a short now, and you don't even know what the data is gonna say? Because trust me that the market is gonna react based on data, okay? And that would be gambling to me. So that's why I always wait at least 30 minutes after the news has come out, the results. And then, yes, we can trade imbalances. We can, again, if we go up, then this is probably gonna leave a liquidity pool behind, and we have the confluence of the 1 hour 50 MA. So then we could place our long here, okay? And then price can go higher to maybe this liquidity pool. Again, it's not financial advice, just some ideas. Tell me, what is it better to buy now, to long now, or to long here? A confirmation, of course, a confirmation. Now, if the results are bad and we go down, okay, let's see how low it goes, because maybe, it goes all the way down straight away to 26,500. Then you can see some kind of sideways or wicks here to the downside, but price is not breaking below this zone. Remember, this was our support back in March. And then if you see in this key zone wicks to the downside, the price is not going lower, then you could expect some kind of reversal to fill these imbalances here. All right, so that's how I would suggest you guys to trade news announcements. Right. Anyway, I hope that was clear and this video is helpful. I'm sorry that because we're very close to the data, it's gonna be in 45 minutes, so I'm gonna pause the video right now so you guys can watch it. Thank you so much for watching, and I'll see you soon.